Hello, 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 everyone. How is everybody doing? Mike Arnold here, co-founder, Pat Trading Partners, along with the one and only Bob Iacchino. Look at that right there on the screen in the flesh. Oh,
I don't think you can say that on the screen in the flesh.
okay. You know what? It's my show. I can say whatever I want.
True story.
Hello, hello, William. Hello, hello, Wavy. Who's they? They defended 4,200, not yet ready for a breakdown. Who's
I don't
they?
know who they is, Wavy.
Who's they? Tesla Force. Hello, hey Ken. Now, have you watched the intro, Bob?
The intro?
The countdown timer, the new
Yeah,
intro.
I've seen the countdown timer.
Yeah, the new one. Do you know what the epic music? That was Ken here, and Ken's in here right now.
Ken wrote this?
No, well, he put it all together. He's a professional musician, becoming
Really?
a trader and investor. Hope you
That's
didn't mind me
awesome.
sharing that, Ken.
That's awesome.
Hey, Jake. Hope you had a good trading day. Hope you did too. Hello, Mike and Bob. Hello, hey Josh. Hello, Options 22. Mike can say it. It doesn't make sense, but he can say it. I can say whatever I want. You know what else I learned, Bob? I
What
learned
else?
from having a YouTube channel. I get reminded repeatedly that I'm an idiot.
That you're an idiot.
I'm an idiot.
Okay.
I'm an idiot
Comments?
because like yesterday,
Yeah.
remember I've said I have long-term sell signals on some systems,
Yeah.
which are weeks to months. But yesterday I was an idiot because we had a rally.
No. Okay.
But then today I was an idiot because we had a double bottom pattern and we pulled back a little today, and I'm an idiot.
You're an idiot.
So
And what is this in the YouTube comments?
I get emails, I get I end up deleting some comments. I just like I'm not even responding to you.
Yeah.
Hey, Lord, I just learned every day I'm an idiot. So you're working with an idiot, Bob.
I got blocked by somebody on Twitter today, and I was actually gonna like his last comment to me. And I noticed, I'm like, why can't I reply to this? And I noticed I got blocked. And you know what it was? Somebody was saying that they had hoped to retire in Florida, but now their gay children are not welcome in Florida. And I happen to comment because of this, they've dubbed this bill that doesn't even have the word gay in it, the Don't Say Gay bill, even though the word gay is not in the bill anywhere. The bill passed and was signed, and all it says is there can be no formal discussion of sexual orientation from kindergarten through third grade in schools. I don't know what public official wants to talk about the sexuality of an 8-year-old, but I don't. I mean, if I were a teacher and an 8-year-old came up to me and said, "I think I'm trans," I'd be like, "Talk to your mom." Just don't
So
bring it
what'd
to
you
me.
get blocked for?
I don't want anything to do with it, but I got blocked for because the guy said I wanted to move to Florida, but now my gay children aren't welcomed. And I started wondering, I'm like, how old are your kids that you know they're gay? But I said, and this is a true story. One of our closest couple of friends down here are two gay men that are married. They've been together 10 years. We hang out with them at least once a week, and they love it here. And they're actually looking to adopt a child. And they said they're never leaving here. They actually moved here from up north sooner than we did, like a year earlier. And they freaking love it down here. And he said, well, you must live in an area of Florida, a small area of Florida with people just like you. And I try to reply, maybe I do. Honestly, I can't disprove that statement. Right. And
And you were
they'd
blocked.
already blocked me. They literally had already blocked me. And so I told him, I said, this is my friend group. I said, you're welcomed here and your kids are welcomed here. Just wanted you to know that. Oh, that was very kind of me.
Yeah, it is. By the way,
Yeah,
Wavy's moving to Florida soon from Toronto. That's a good
yes.
move, Wavy.
Make sure you reach
Uh,
out, maybe come to the Gulf Coast.
and the ones in control of it all.
The ones-
Can you introduce me to them, Wavy?
yeah,
Or
let's
would they
find
think
them.
I'm an idiot too?
I have family in Toronto, by the way. God, are they frustrated?
That's where I was born, in Toronto.
Really?
Yeah,
That's right. You're a dual citizen, aren't you?
Yes, I am. Dual
You
citizen.
used to think of the place of Canada as the place you could run away to if you needed to.
No, they'll freeze all my assets. I can't
I
go
know you
there.
used to think that.
By the way, tomorrow we have Michigan consumer sentiment is the big thing tomorrow, so we'll keep an eye out for that at 9 a.m. right after the market preview. We just go over to some house cleaning stuff. Overall, you get a little pullback in tech. Amazon continued. It was up today based off the split. There's a lot of mixed bag today, but that's what we saw. Energy still up strong. Who are they? Who's the they at 4.1% that there's not going to be a 25% basis hike next week, Bob?
I don't know, but that's not the official they, because there's only going to be 25 basis points. And since they control it all, they would know that.
I'm so confused at this point.
Yeah.
And by the way, as I mentioned this morning, Tier 1 Alpha, you can sign up for their stuff. It's really some fascinating stuff. But remember, the gamma flip from negative to positive isn't until about 4,400 in the S&P. We did get that nice little rally back. Just wanted to go over a couple things. See, we dipped between the 50 and the 62.5 on this from the low back on the 8th to the high yesterday. And we had a wonderful, now this, I watched those reversals in the 50 to 62.5, and we had a beautiful double bottom pattern that ran all the way up. So I hope they spotted that, because that was just beautiful right here in that key area I watched. So just wanted to point that out to if they are watching. What are your thoughts on the overall price action from today, Bob?
I'm still in the same place I was when I talked to you guys on Tuesday and this morning. It's just overall, it's a very weak. It's funny when you talk about the CPI from this morning. For those of you that weren't on the pre-open live stream this morning, the CPI was as expected, which means it was unbelievably high, right? So there's sometimes where, it came in as expected. People are expecting it to beat, but I guarantee you there were some people trying to position, especially yesterday, for the CPI to be not as strong. And remember, this particular batch of CPI did not have any war premium in it at all. It had no increases from the Russia-Ukraine conflict. Also, tomorrow's Michigan sentiment is very important because it's the first March data we get. It's the March flash Michigan sentiment data, which will have the first batch of inflation expectations in there. So sentiment, I'm guessing, is likely to be weak. I didn't see the estimate.
The estimate
Yeah.
is.
Yeah, I didn't see the estimate on that.
Estimate is down from the previous. The estimate is 61.4.
Yeah, so this will have war premium in it. This will have conflict premium. This will have, because it's March, it'll have over $100 a barrel oil in it. So seeing those expectations are pretty big. Seeing how people are reacting initially, sort of their first gut reaction to what's been going on, is going to be in these Michigan sentiment numbers. So that's super interesting to me. But yeah, I mean, I understand. Again, it's retail buying the dip, and I learned a long time ago that retail buying the dip isn't the buy of the dip you want to see.
No, but we could get it definitely a short-term bounce. Have you seen this? I was going
Sure.
to save this for the stock segment, but since it's interesting, you want to talk about buying the dippers. Here's your ARC cumulative fund flows since the middle of January. Look at this. You want to talk about the dip buyers in ARC. It's just, here's your retail still buying the dip. So they're not scared off yet. Means you can get some really nice, you can still get like patterns playing out. Like we can get a rally off this double bottom, but this is not the bottom. It might be a bottom, but it's not the bottom. But look at that. ARC's been getting trashed, and look, just throw it more money. Throw it more money. So it's just mind-boggling to me. But again, just let me take a look at real quick here. I'll do some more detailed analysis, break down the stock segment to not take much time away from Bob. But overall, if we get through today's highs and yesterday's highs. I'm still targeting the first target on that double and the rotation zone coming in at about 43.39 in the S&P. You see here also in the NASDAQ, I pointed out that S&P little double bottom, and really nice double bottom play in the NASDAQ. Also in that same between the 50 and 62% pullback. And again, if we're NASDAQ weaker, but if it can get through the highs from yesterday, the key target on that is about 14,000. Just happens. Dow bouncing back a lot again. Another beautiful bottoming pattern coming off. So that was pretty much the trade of the day in my book for the upside. And now the Dow, I will be targeting about 33 800. Yeah, roughly about 33,800. Russell down and up, but still caught in this huge range. Let's see, crude. What crude end up doing again? We have hit the first and second targets in the double, little bounce up and then roll over. So crude, we still have that potential final target, but you have the rotation zone in the way. So anywhere between 100 and 102 is the area I'll be watching for a potential bottoming pattern. If we go below that, I'm watching for the bigger pullback then. We have the weekly rotation zone in this whole up move. Look at that. Weekly rotation zone in the 50%. So if you decline below 100, my next target is about 95.50 to 96.50. Any thoughts on crude, Bob?
No, not really, because I think in the short term, it's very much dependent on if Russia retaliates. They retaliated already with uranium. Remember, Mike, you were asking about uranium?
Yep.
They've put on the table slowing to a halt the exports of uranium. So I want to see if there is a retaliatory strike on energy. I don't think the exports to the U.S. and, that brave Justin Trudeau, who banned all the exports from Russia into Canada, of which there was a grand total of 0 barrels. But the UK is a larger partner of Russia with that. And we'll see if there's any more follow through with that. As long as the conflict goes on, the spike early today, I actually thought it would hold in crude oil. But again, if we have a sustained level over $100, it's just so inflationary that, I'm not going to buy it. I certainly wouldn't buy a crude oil contract here. But if we have sustained prices over $100, eventually it's going to build into a long position again. I wanted to mention about the equities. The buying the dip thing, like if you look at sort of a history, you could find this on Investopedia and some of the other places. You look at a history of bear markets as represented by the S&P. You have to go back to 2007, October of 2007, really, to see a bear market that looked like a bear market. And what I mean by that is the 2007 bear market was actually the decline of the S&P in percentage was 49% and took 56 months to recover from that. All right. So and by the way, what I mean by that is to get to a new high from the previous high, not to get out of the bear market itself. So that's the way that they classify these things, is how many months it takes to get to a all new time high.
Yeah, that's right. Say it like I do.
Whereas the most recent, the pandemic bear market, it was a 5-month recovery. So a lot of people haven't experienced that. And prior to that, there was a bear market in 1990. Was basically a 20% drop, and then it was only a 4-month recovery to a new I can't say it right. All new time highs. That was only a 4-month recovery. But prior to that, you're looking at 20 months, 21 months, 34 months, 69 months in terms of the bear market of 1973. So when you see these kinds of rallies, even when you see the kind of bounce that we had today off of the sell-off, it's not comforting at all to someone who's I've experienced 2 of these bear markets, right? 2 of these bear markets are actual bear markets. So what's the difference? Well, the short bear markets had the Fed involved in terms of quantitative easing and lowering rates. That's what caused the shorter bear markets to be short, right? Meaning the pandemic one. They can't do that with 7.9% inflation. Maybe they still will. Maybe they still will. But all that means to me is that the next one will be freaking crippling, right? The one that comes after the one that we just entered, with the or the NASDAQ rather, closing in bear market territory. The S&P did not. The Dow did not. The Russell, I believe, did. But don't quote me on that. So, when you see a sell-off and a recovery like this, man, a lot of people that started investing during the pandemic, I would say, I don't know, all of them have never seen an actual bear market. And a lot of people have to go back to 2007 to see an actual bear market. And some people didn't invest before that. Like if you think about 2007, right? It's only 15 years ago,
Yeah, and I
right?
mean,
So
there's a lot of people on Wall Street that have never really been through that are active traders, like employed by the big boys. They're not members of they. They're not members of they, but they are on Wall Street, employed by the big boys, and they've never seen a real bear market.
right. I mean, think about a 13 or a 14-year-old in 2007 is 29, 30 right now, and he's making the big bucks on Wall Street at one of the firms, because they became a data analyst with a background in math, and they've never seen this. They've
No,
never seen the Fed not come in. That's why they throw around the plunge protection team so easily, which I believe exists. But it sure is much easier to protect against a plunge when you know the Fed put is there. I believe the Fed put is gone. I really do, with 7.9% on inflation. We've
and
gone 30 years without this kind of inflation. Today's year over year number was the highest since 1982.
yeah, and now what was I going to say? Boy, that's because back to that topic. Even if you graduate, let's say you graduated in '07 or '08, okay, from college.
Mhm.
Really, you entered the workforce on Wall Street, and it's literally you were coming out of the bear market with
Right.
the Fed juicing everything, and you've never seen anything but that the whole
Right.
time.
So anybody who graduated from '08 on, let's call it, let's just kind of throw that out as a blanket statement. They've never seen a real bear market without a Fed.
Yeah, and that could be interesting. And I agree with you. If the Fed puts the put back in place and doesn't hike or starts, gets one or two hikes and then starts cutting it back to zero, the next one's going to be because again, you're just delaying the inevitable. You've never
Right. And I
fixed
said it this
anything.
morning. I said it this morning. To me, the most important part about the CPI was the average real wages year over year being down 2.6%. So that basically means everyone's paycheck, generalized obviously, but everyone's paycheck is 2.6% less than it was a year ago, regardless of what level you're at. If real wage gains are negative.
Yeah, and that's
So,
going to hurt. It's going to end up hurting a lot of. And we saw the savings rate back to where it was in 16.
oh, I didn't see that. That's
Yeah, that
brutal.
was that was I showed that a week ago or something. It's all the way so
Mhm.
all that extra COVID money and everything else, and the savings rate's back now to where it was in 16. So all that we've done a round trip in there. So this is there's not so now you're super high inflation. Yeah, you've had minimum wages bumping up, but they've not kept pace with inflation, and
Right,
people have to keep buying stuff like necessities.
right.
Oh, what are we gonna do? We're all, you know what we're gonna do? We're
What?
all gonna buy a Rivian.
It's a good looking truck, car, or whatever they call
Yeah. So, and Rich says it's time to short the market and buy oil. So
it. You might be right. I don't know.
we shall see. Long term, again, bearish on the market. Actually, right now I'm short term bullish on the market, short term bearish on oil. It will flip the other way again. So, question to both of you: how are you dealing with inflation?
I'm not. I mean, I ride my bike more than I drive. We
How
cook at home more than we go out. But it's just typical in-house budgeting. Are you talking about investing?
I
From an
mean,
investing standpoint or from a like
from
personal
my
standpoint?
investing standpoint, you, you know, the
Gold?
in more cash in precious metals or other commodities, or if there's stuff I'm in like consumer staples. I'm trying to stay away from anything consumer discretionary
Hmm.
because you can get those bounces in it, but long term, now if we go into that official recession and as stuff starts bottoming out, that's you can get back in that stuff at that point. But right now, the we've talked about this from a investing point. It's the commodity. It looks like the commodity super cycle, and I'd rather be in on pullbacks in tangible assets with anything in the commodity space. Personally, we stopped essentially eating out months ago. So we just do everything at home, and I look for just good deals. And I'd rather make my steaks at home and do everything, and then go pay even more inflated prices at restaurants. And so we
Yep.
don't drive much. We have one car because we both work from home. So we dropped to one car. It's just because there's no point in having another car that's barely driven, sitting there with insurance rates and everything else. And now with gas, I'm really glad. So
Right.
just stuff like that. I mean, just common sense stuff. But again, I have to go buy day to day products. I have to go still buy food. There's no way to avoid that. It's just taking away things that I might, instead of buying that new electronic gadget, that's going to have to wait.
Yep.
So I see many people saying hedge with gold again, and gold not only. You have any thoughts with that about that, Bob?
Yeah. So there's a couple of things, by the way. Inflation is not historically bad for equities. It's historically good for equities. There's a couple of issues. Stagflation is historically bad for equities. Okay, so stagnant growth and high inflation. We haven't had a lot of um, occurrences of that. But if you look at a correlation between inflation rates and equities, it's positive. It's positive to the good. So stocks usually do better. You just think of it from a perspective of what does good in inflation. Stocks and real estate do, because inflation is not just price inflation, it's asset inflation. And stocks and real estate are assets. Okay. But stagflation, you want real estate, you want gold, and you want healthcare in terms of stocks. We own Bristol Myers Squibb, and we own what's the other one, Mike? Um,
But now you have
I
that.
can't remember off the top of my
See, now
head.
you made
Eli Lilly, Eli Lilly, Eli Lilly.
Eli Lilly.
Yeah, and those two actually have not suffered along with the market. They've held up pretty well. Um, so when you're looking at a stagflation playbook, you're looking at gold, you're looking at real estate, you're looking at healthcare, you're looking at staying away from technology, staying away from consumer discretionary, those kinds of things. But the issue here is what the Fed is going to do, because like before, where we've never had a Fed getting involved in collapsing markets and bear markets and recession, we've never had a Fed with a well, I don't even know where the balance sheet is now, over $7 trillion balance sheet, who's going to have to somehow hike rates during a stagflationary period. So I don't know. Also, by the way, historically, gold is not a very good inflation hedge. It's a really good pre-inflation hedge. In other words, when people start fearing inflation, gold does well. This, again, is just historically. I don't know what's going to happen now, because we've never had a Federal Reserve unwinding a massive balance sheet and being forced to because of the level of inflation during a period of stagflation. We just never had it.
Maybe we live in interesting times. Sterling again is going back to that thing we talked about the other day. This is all scary, but nothing I've heard recently is. But nothing I have heard recently is when Bob said Taiwan accounted for 63% of chips and China accounted for 6. If China moves on to Taiwan, it's game over globally.
Bad.
That'll be yeah, there we go. That'll be really interesting. And we have Abraham saying if you buy a would contacted car, government can shut it down. You mean a car that's what does that mean?
I honestly don't
I
know.
don't know. My next car is going to be all mechanical. I'm going back to a throwback stick shift FJ, a Toyota FJ pre 1982. There we can. That's actually what I'm looking for now. Well said. We can't predict the future, but we do our best to align ourselves accordingly based off future events. Yep, you can't predict the future, but that's why I can only look at chart patterns because I'm not
There
smart
you
enough to
go.
figure out anything. I don't know
There
what
you
they gonna do. What they gonna do? I just don't know what they're. Who said this too? Did I say? What was this? Where was this? William, did you say measure? Measure? How do I say measure? How do I say it, Bob?
Measure.
I'm
I've only
really.
heard you say measure, but I could be wrong.
I don't know. I've pronounced everything weird. Remember, I'm half Canuck, so I'm actually all. I was born in Canuckville, so we'll see. What else do we? Oh, connected. Okay, connected vehicle. They can shut it down remotely. Well, then we're gonna have the digital dollar, so they can just. That's gonna make it really easy to confiscate. So, Bob, you won't just be blocked on Twitter; they'll just confiscate your assets.
Yeah, they just confiscate it.
I mean, we had the trial run in Canada. Boy, we're going down the conspiracy. It's measure for the Canadians. Yep, exactly. What else do we have?
Measure.
We have gold. Gold, nice little pullback in there. I'm still watching for it. I think especially if we keep getting a market rally, we'll get a nice bigger pullback in gold. But that's where it's with this, trade around the core position, and you identify the key areas to buy on a pullback because I think it's still a little overheated. It'll be interesting to see this next rotation up, but I think there are a lot of people rushed in late to the game. Then we'll get the pullback. Then, if we especially get another major market dump, we could see some gold and silver get liquidated before it puts in a really decent bottom. Not saying it'll go to new recent lows, but we could see some
Right.
liquidation events in that if we do get another flush out move in the market.
Could be a longer term bottom.
Yeah. And notes, I talked about this back below the 62.5 level. We favor a retest of the low areas, and you're getting into that retest of the lows, anywhere between the 100% and the 87.5% move of this little up move, and we're back. We tested the 87.5%. Any more thoughts on bonds or yield curve or notes or yields or?
Yeah. So it was the price action was very interesting today after CPI because initially, and this is something I said this morning, initially we saw we saw equities actually start to climb back out of the hole, and then they fell back. We saw the 10-year note go above 2%, and it finished at 198 today. So it tells you that despite making or hitting analyst estimates, I said this morning that I think we should take economics out of the science realm and put it in the philosophy realm. We had a 10-year note. Let me see where the last time we were at 198 on a settlement basis. Let me take a look here on my little spreadsheet. So today's settlement was 198, and the last time we hit 198, what was going on? We had a 199 settlement on February 23rd. So that was full on. The Fed is doing 7, right? At
Okay.
that same point in time, the 2-year note had a 158 settlement. Today's 2-year note settlement, 172.
Wow.
Yeah, so full 14 basis points higher. So this tells you that the market thinks the Fed is forced to raise rates. They have absolutely no choice. They can't back off. And that's what that 7.9% inflation showed you, again, without the war premium in it already. So that's my only thing. So I think yields, we talked about yields probably bouncing or yields, I'm sorry, cratering and then bouncing back higher. What do you have up there? Is that the treasury or the yields? That's
That's
the
the
treasury,
yields.
or that's
That's
the
10-year
yield, right?
yield.
Yeah. So we talked about this happening. We talked about yields probably going back down and then bouncing back up. That double is going to complete itself, in my opinion. we're in the quiet period, so it's likely the Federal Reserve is going to hike by 25 basis points and then probably try and talk the markets back a little bit, and it's not going to work. It'll be interesting to see. You could get that double bottom fulfill its target off of Michigan numbers tomorrow. That potentially could happen if you see really bad, not a really bad, a sort of fair headline number and then inflation expectations being really strong. That'd be the case where I could see that happening tomorrow.
Let me just see. Let me go back to my main watch list. Where Christoph says head and shoulders on the 4-hour gold chart. I did not dial down in gold yet. At 4-hour. Ooh. Is it? Yeah. That's interesting. Look at that. Christoph, again, good with the technical calls. Let's see if it's going to break that neckline. Let's actually do a little projection on this. Do a little dance. Let's see. We don't know where it's going to break yet, so I can't give it exactly. But let's say it rolls over later today. That would also take it back below the 50 on the 4-hour. Oh, look at that. Look at that. Significant level. I have a significant level back at 1877, and that could be, yeah, that's first target. Oh, this is great. First target is virtually the bottom of the daily rotation zone. The second target is right there, and the third target is right where the 50 is, and this prior, look at this, prior breakout level. Thanks for pointing that out, Christoph. I did not get to my analysis yet on that, but that is a fat, and look at that, right back to that weekly rotation zone. Look at these targets, Bob.
That's crazy.
Daily, right back here. Look at that breakout level with the final target and back to that weekly rotation zone. That I'd love to see that trigger, because that's like, all right, add it back. What took off on the rally, add it back. So, what did we added uranium? Oh,
yeah. We added uranium
later in the day.
Yeah, it did.
Back up a bit, but that's a long-term play. That is also a long-term play. Again, it falls in commodities. It has the sort of the war thing with Russia, and I think even Germany says they're not going to start up back up their nuclear reactors. At some point, this could get to a point where they have to. What's interesting is uranium has a lot of room to run for the upside. So if anybody's looking for potential stuff, do your own homework on it. Again, we don't give investment advice. Everything's for educational purposes only. But this could be a long-term substantial play. So, and you can see it was dirt cheap down here at COVID, and it's moved up. But this is a long-term potential play for us.
Yeah.
What are your thoughts on the dollar, real quick, Bob?
They remain the same. I mean, I think that the Fed has to be on the most aggressive path. So if the dollar pulls back, it's a buy to me. Just from a fundamental standpoint, the Fed has to be on a much more aggressive path than the ECB. And that's the main comparison fundamentally you have to make, right? Because the dollar index is mostly dollar euro. It's not all dollar euro, but it's mostly dollar euro. And the EU is going to get most affected by this conflict now, in the future, sustainably entrenched, whatever you want to call it. So I thought that Christine Lagarde today was actually a little bit more hawkish than I expected, given the conflict. But she was still hawkish. I mean, she was still not ready to say that they're going to end quantitative easing completely, and they're certainly not considering rates yet, moving rates yet. Whereas our Fed's about to move rates, and they're likely going to start quantitative tightening at some point. They're going to have to. So the dollar has to be a buy. It has to be a sustainable buy on any dip at this point, fundamentally.
Options 22. Bob, Mike, given that China and Russia have revealed themselves, do you feel the global economy as we've known it is toast and no longer exists? This commodities will stay elevated at new levels.
Given that China and Russia have revealed themselves, do you feel the global economy, all known as toast, no longer exists? It's probably a longer conversation. I mean, China revealed themselves a long time ago. I'm not sure China is going to invade Taiwan because they consider Taiwan China. So if they would have to be, in my opinion, again, I'm not a geopolitical expert, but in my opinion, China would have to be prodded to military action in Taiwan. And I doubt we're going to do it. Um, Certainly, if Trump were to get back in and he's angry and has had too many cheeseburgers in a day, he might. But Biden's not going to. I mean, they won't even establish the no-fly zone. So, and I'm not saying they should. I don't take an opinion on war in these conversations. So, yeah, I think there's going to be a lot more focus on if you're saying that globalism is dead. I think it's ill. I think it's sick. We've got chip plants being built here now. I know as a consumer, I buy a lot of sneakers. Okay, I like sneakers, and Nike was one of my favorites. I haven't bought a pair in a year and probably won't because of the Uyghur Muslim thing in China. When you look at so I'm starting to look at more American-made products, and if anyone thinks like that, I think it's probably major corporations trying to sort of secure their supply chains closer to home because of the supply disruptions. But I don't think that has much to do with Russia, Ukraine. I think it has to do with the issues they're dealing with. So I think globalism is on the ropes, if that's what you mean. But I'm not sure I'm answering your question.
Sterling asks, are you guys still bullish on companies not domiciled here because they have better valuations than our companies do at this point in time?
I'm not sure I said that. I think I know what Sterling's talking about. It probably sounded like I said that, where if you had to be bullish something, I think I said I'd rather buy uh, EU banks at 50% a book than crude oil at $112. I kind of stand by that. But I feel like Sterling, the way you said it, bullish on companies not domiciled here. I'm not sure I would say
I'm
that.
I'm I'm personally still bullish on some emerging market stuff like Brazil plays and other stuff like that. There are
Mhm.
some great valuations. There's some great valuations in Japan. There's some great valuations in Brazil. So I am still bullish on those kind of things, especially some Brazil plays with commodities with a potential commodity nuance to it. Wavy Bob the sneakerhead. I love Yeezys. What are Yeezys?
Yeezys. Yeezys. I don't. I think Yeezys are ugly as hell, but they're expensive and they're collectibles.
What are they?
Um, it's Kanye West shoe brand.
Okay,
Um,
I know nothing.
Yeah, but I was a big Jordan fan, and actually I'm a big Converse fan. So like, I buy a lot of special issue Converse, or I used to anyway, and I have probably 8 to 10 pairs of Jordans. I'd say probably eight. But I'm not doing it anymore. But yeah, I don't know if sneakerhead. I tried to get in on all the drops, and if I bought the drop, I would sell a lot of them afterwards. Because Mike, you could buy Jordans on what's called a release, a drop, and then you could literally go on the secondary market and make $20 to $50 on the pair if you don't open the box, like if you never take them out of the box. And I would do that all day.
Hmm. Well, I'm the guy in the summer who's wearing socks and sandals, so that should tell you
Yeah,
something.
there you go.
Not, I
There you go.
can't do it without the socks. I can't just wear sandals plain. I gotta wear the socks
Yeah.
and the socks, sandals, and the tie dyes. That's me. William, yeah, I don't want to get into a lot of stocks here. I'll glance at it quickly. That's what the next stock segment is for. CF Industries Holdings. I wasn't ignoring it. I was just trying to get through stuff because we have limited time with Bob. Agricultural processing industry. I mean, that was a great little buy on this rotation back up. It's continued. I just watch. If you are long this, you do have a potential double top. Now, does not never has to trigger, but it gives you a great area for a stop placement. Below 84.28, I'd put it just slightly below the rotation zone, unless the rotation goes out of the way, because you can get easily a pullback easily to the prior major breakout area. So keep an eye on that if you want the next targets higher, and then bring the other stock stuff to the stock segment, please. Your next target's higher. Stop raise 105.24. Next major target 109.51. Let's just see how it's. Yeah, see, this is getting really overextended. Some of these things are getting a little overextended. That's why I'm keeping an eye on these topping patterns. Because if we get that topping pattern, just like we looked at it gold, I'm not saying this company's like gold. It's just in the agricultural space, chemicals, agricultural. With fertilizer, what was the latest stance on fertilizer in Russia, Bob? Are they cutting off
And
fertilizer?
short-term ban, yeah.
So
They're
yeah,
not.
I mean this could still easily pop higher. Just keep an eye, but we have a pattern here. So that's where I like to trail out with stops, because if it goes higher, you keep running with the current trend. But if you get that reversal, I know where the stop point is, because then you get watch for the bigger pullback. And
Yep.
wheat's dropped the three days in a row, still holding above that 62.5 retracement from this launch pad though. So that's the key area I'm going to be watching for. Uh, what else do we have? Socks and sandals, Mike. Your stock value just plummeted. See, you can short Mike.
I wish I could show you guys. I'm going to go get my favorite pair of Jordans and show you guys before I go.
All
I'll
right.
be right back.
Let's see. NASDAQ double bottom on daily chart is valid. Let me get to NASDAQ. No, I don't think that double bottom is NASDAQ. It's just that 4-hour double. This daily double, I think, exceeds the move, but we will double check it to make sure. We have to go to this side. And, I always like to double check. No, see, it doesn't. It's not valid, Rich. It is not valid, because the second and third target clearly exceeds the move that started it. Does that mean, again, I will keep clarifying this, especially for newer people watching this. Does this mean if we break above this key high, because a lot of people will trade this as a double, does it mean it's not a tradable event? No, it is definitely a tradable event. What that means, though, is I can't use the tested out double targets because they are not reliable up there. What would I be targeting? I'd be targeting this pausing area at 14,592. Then I'd be targeting upwards to about 15,000 to 15,060. And there's Bob showing the shoes. What? Ooh, those are
This is
fancy.
currently my favorite pair of Jordans,
Those are fancy.
right? I
They were
didn't
like
think I'd get.
$20.
They were like $20, yeah.
Okay.
There's that emblem. You got to have the emblem, otherwise it just doesn't work. So,
Boy, look, we've lost a couple thousand subscribers because I wear socks with sandals.
that's why I got the shoe. I'm trying to make up for it.
You're trying to make up, so we're gonna see if they come back in. Bob showing Air Jordans versus Mike showing his sandals.
Yeah. So while maybe you should use this as the what do you call that thing? Yeah, I buy the Jordan 1s. The other one, I had a pair of like 8s, but 7s, I think, but I don't like walking in them. Guys, I got to go. I will talk to you guys next week.
Wavy has the same pair in blue and white.
I have that same pair in blue and white as well.
Why do you need to? I'm confused.
Listen, you can see how clean these are. I've worn these a little bit. Like, this is kind of the telltale thing right here. You can see it's hard to see in this camera, but you see like a little crease in here that shows they've been worn. I can still sell these for probably $50 more than I paid for them. So,
all right. Well, there we go. We've tied in markets. We've tied in shoe investing. And we've tied in Mike's ignorance of shoes besides sandals. So it was entertaining. Bob be back next week.
Yep.
And everyone, I'm doing a stock segment, in about 10 minutes, and then I will have the market preview tomorrow, and we'll take a look at consumer sentiment and how the overnight European session traded and fine-tune our levels. You are welcome, Wavy. Thank you, William. See, Mike has the most style with my sweat jacket and my sandals. There you go. With that, I will talk to everybody in a few minutes if you want to join me. And please bring your stocks you want to take a look at to that stock segment. Let me just get back to small Mike. Hold on. Hold on. Let me get to small Mike. So, by the way, let me say also, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please come back and like the videos and leave some comments. Especially, let's get some sneaker comments in there tonight. See if we can get some new interest into the channel based off of some sneaker comments. I will talk to everyone later. Bye for now.